Good day, Georgie. This is Ryan with TrendLizard.com. Thanks for sending me an email with the request for the custom analysis for this month for you. We're going to take a look at three tickers, ones that we've taken a look at for you before: Apple, Carnival, and Boeing. We'll get started with Apple. I know we've looked at these before, but we're just going to start from the beginning anyway for those who haven't seen these videos, since I do post them to YouTube. So let's get started on the all-time chart here from Apple. Incepted back in '84, had some chopping around. In 1997 is when it really began its ascent. It had a very large pullback in the early 2000s, like most things did. And then from 2003 is when it's really blasted off. After splits and all that stuff, it's gone from a handful of pennies up to $100 and some odd, $140, I think, at the high. So very big up move. It doesn't mean it's going to immediately and directly continue this up move forever, and that's why you are asking my advice, and that's why we're going to take a look at it. And if you recall from last video, there are some things that we are concerned about. Namely, if you look at the advance off that 2003 low, we have a 1, 2, 3, 4, 5, a fairly obvious five-wave move. So the concern is, could the entire advance off that 2003 low have completed as a very large third wave to embark on a very large fourth wave pullback that could last probably several months, if not a couple years, as it corrects this entire up leg? So that is the concern. As we drill in a little bit further and take a look at the advance off the 2013 low, so if we go back here, it's just this advance here, which we are considering the fifth wave of that third wave advance. Again, what we see is a fairly obvious 1, 2, 3, 4, 5. So that's a concern. It seems that even if you want to label this differently on the very long time frame, if you look just at the advance off that 2013 low, again, you find a five-wave advance that could be complete. Then if you look at the advance off the 2019 low, again, you only have two larger pullbacks in this up leg, which make it look like a 1, 2, 3, 4, 5-wave move. So on multiple time frames, you can see fairly obviously how five-wave moves could be completing. So let's go ahead and zoom in a little bit further here. This takes a look at the advance off of March's low, and again, you have a nice five-wave advance into the early September high, and it has headed sideways since then. So a lot of ETFs, a lot of markets and market segments have continued higher. Apple and a lot of its buddies, Netflix, Amazon, those types of things, have also continued sideways to make it fairly clear that that five-wave advance is completed and something larger to the downside has begun. So all of it lines up fairly well with the possibility that a more important high could be in, and that concerns me. So if we go ahead and zoom in again at the pullback that's happened since September, you have this fairly sharp down leg and then largely sideways counter trend movement since then. Now, one of the interesting parts about 2020 is we've seen a lot of these counter trend pullbacks just kind of end and give way to higher prices without giving us that nice C-wave decline that we have grown to expect after doing this for 25 years. We're just not getting those nice ending patterns. So that's always a concern, that we could be wrong and maybe it just kind of ended in early November and this is the resumption of the uptrend. So the point in telling you that is a move below 116.75 at any point is a good indication that this pullback is not over. If instead it finds a way to continue higher from there, we would have to debate the possibility that we got another random ending to a pullback. But weirdness in 2020 aside, this looks like an incomplete pullback. We see on the larger time frames the potential for a larger pullback. It makes it hard for me to like Apple. I'm not buying it. I trade Apple all the time. I do not own it right now because I see this potential for a much larger pullback. So let's go ahead and take a look here at what it would mean if we did in fact have that larger pullback. Basically, again, it would be the indication would be a much larger fourth wave pullback, and that would point down to the 54 to 87 price area if we're looking at a Fibonacci retracement. So that's pretty substantial. We could see a pretty large pullback if this is in fact a larger fourth wave correction. That is why I'm staying away from it. I see the potential for that. I do want to post one alternate possibility, and let's do that right now. So here's that advance off the 2019 low. To me, it looks like a fairly obvious five-wave move. One alternate possibility is that it is still in some extended third wave advance, so you have the first and the second wave, and this is the first and second, third and fourth wave of a third wave advance. If price heads higher from here, we would have to consider this as a possibility, and if that was the case, again, it would be that we got a truncated pullback for that pullback off of September's high, and it's just going to head higher from here. If that's going to happen, it will stay above 116.75 at all points. If it moves below there, then you know that the larger pullback is coming. So that's a really important level. If you're bullish on Apple, only be bullish on Apple as long as it's trading above 116.75. If it trades below there, you got to bail. You got to be careful, because at some point the market's going to actually start doing what it says it's supposed to by giving us larger ending patterns to the downside. So if we get a break below that level, you'd have to be worried that we're going to get something that moves a lot lower, likely in a larger fourth wave pullback. So that's my take on Apple. You can be bullish as long as it's above 116.75. I'm personally not going to own it because I don't like the way it looks. But if it moves below that level, nobody should be bullish on Apple. Okay, there's that one. So let's go ahead and look at Carnival, CCL. Here it is, again, one we've looked at before. So first off, from its inception back in 1989, it's really only done two things. It's given us trendy 5-wave advances, bullish stuff as we know, and those have been separated by counter-trend 3-wave pullbacks as we see here. Off the 2008 low, it gave us a very clear 5-wave advance. Obviously, something changed in 2018, and it completely tanked, retracing all the gains that it achieved since back in basically the mid-90s. So this pretty much reset the chart. It doesn't matter too much what else is going on here. This reset the chart. Now the question is, did a major low get recorded in 2020, or is a larger pullback going to form? And we answered this question last time. I don't like it. I don't like the way this recovery began in 2020. Basic Elliott wave 101. 3-wave moves are counter-trend moves. 5-wave moves are trendy moves. You see this down move off of the 2020 high. It was a 5-wave move. As we know, trendy moves are 5-wave moves. This isn't my opinion. This is the facts behind the Elliott wave theory. The first up leg off of April's low, a very clear 3-wave move off of April's low into June's high. From there, you have this big, large, choppy pullback. Looks and feels like a B wave. It does not look like a second wave within a new trend. So you have a 3-wave up move to start, a very big, choppy B wave pullback. We're getting strength now, which is great, which is exactly what we were looking for last time. We said we wanted a C wave up. Well, we're getting the C wave up. This is great. This is part of a larger counter trend recovery. So this one level that we would be looking at for this to end is 29. This is where Wave C, this current up leg off of late October's low, becomes the same size as Wave A. That's a very common relationship for them to hold. It would allow it to set a new high above this high and then reverse. Price loves doing that because it sucks a lot of people in that are playing some type of breakout strategy. So that's an area to look at. It could move as high as 35, but the bottom line is it doesn't look like the trendy the resumption of any uptrend. This looks like a counter trend move, and from there we expect CCL to reverse back down and not do well. So that's why if you're owning it or you're trading it, only do so in this up leg. As soon as there's an indication that this up leg is over, you need to bail. A move below 18 at any point would be such an indication. That would be time for you to get out. But basically anything once you get back up to this high and you start seeing any type of notable weakness, that would be my clue to get out as well, because at the end of the day, according to the basic Elliott Wave 101 stuff that we know, this is a counter trend move. Therefore, you can't really play it on any longer term time frame. So there's CCL. All right, let's go on to Boeing here. Again, kind of same idea. It's been giving us trendy 5-wave up moves and counter trend 3-wave pullbacks since the beginning. And just like CCL more recently, it's been smoked by a very large pullback, and the question becomes, is this just another counter trend pullback within an ongoing uptrend, or is this the start of a larger pullback, something that we want to stay out of the way of? So let's go ahead and zoom in. Here's a look at the advance off the 2009 low. Super clear, very clear 5-wave advance. Now you have that 3-wave pullback into the 2020 low. The question is this the low? Is this the end? Has the uptrend resumed, or is a larger 3-wave pullback going to form? So let's go ahead and take a look at that advance off of March's low. It takes a lot of creativity to find a way to call this the start of a new uptrend. Here's my best way of doing it. This is a first wave that lasted a couple weeks, and ever since then we've spent about 8 months in a massive second wave pullback. I do not believe that this is the case. This is a stretch. This is us trying to force a bullish labeling on a chart that does not look bullish. Here's what I do believe is happening. I believe we got a 3-wave advance off of March's low into June's high as wave A. We've been at a very large choppy B wave pullback into November, and then as we called for in our last video, we're getting that C wave advance in November, and it has the potential to continue higher. 289 is where this up leg equals this this wave A, so that's a potential target. As long as it's trading above 179, higher prices are possible. But again, once it starts setting new highs or continuing up into this area, I would take any notable weakness seriously, because that could be an indication that this entire counter trend recovery has run its course and is getting ready to complete and resume the larger pullback that's happened off the 2018 high. So that's what we're looking for. It should head higher for now, but you can't really hold it on any longer time frame, because it's just not bullish. So on any longer time frame. So hope that's helpful, Georgie. Have a wonderful rest of your weekend. We'll talk to you again soon. Take care.